Hey there YouTube. So in this video I want to cover the IRS form 2350. This is an application for extension of time to file a U.S. federal income tax return. This is the income tax return extension for a form 1040 individual income tax return. So I know a lot of you are probably seeing this and thinking, wait a minute, 2350, isn't there a different form I file when I want to extend my form 1040? Yes, there is. It's the form 4868. So these are both extension requests, but one is filed for a really unique kind of particular set of circumstances, and that's this 2350. But just to get a bit of background and show a fact pattern where this would be necessary, let's look at a slide here where I have some of the rules and an example laid out for us. So most U.S. taxpayers, when you want to extend your 1040, you get an automatic extension if you file Form 4868, okay? So the due date for Form 1040 is April 15th of each year. You can file this, and the IRS will automatically grant you an extension out to October 15th of the same year, right? It's an automatic extension request. Now remember, the extension request is just to file the return. It's not an extension to pay. So if you're a taxpayer and you owe money, you kind of want to rough in what you think your return is going to be in April and make a payment in April, and then you can actually finalize your return and get it submitted on or before October 15th. Now, when is this 2350 necessary? Well, in some cases, a U.S. taxpayer might need even more time beyond October 15th to file their 1040, and this occurs when they are trying to qualify for the Foreign Earned Income Exclusion, right? So the Foreign Earned Income Exclusion, if you are a U.S. taxpayer and you're living and working outside the United States, you can qualify for the Foreign Earned Income Exclusion, which exempts up to a certain amount of your income if you are physically present or physically outside the United States when you're living and working during the year, right? So that's either the bona fide residence test or the physical presence test. So the 2350 comes into play when a U.S. person moves out of the U.S. to start a job, they establish residency in a country, and their moving date generally falls somewhere, between October 16th or December 31st. And that's the range that we're going to, it'll be clear why that's the range when we look at this example here, right? So, so in this example, let's look at John here. So John is a U.S. citizen and he lives and works in Florida as an accountant. John decides that he's tired of Florida and he's going to take a job with an accounting firm in the Cayman Islands, right? And his salary is going to be $90,000 a year, so he's making $7,500 a month. He moves to Cayman and he starts his new job on November 1st, 2020. Okay, November 1st, 2020. Remember that date. Now that John lives outside the United States, he's hoping that he can qualify for that Foreign Earned Income Exclusion, which exempts up to $107,600 of his foreign salary per year. Okay, so while in Cayman for those 2 months, John earned $15,000 of salary for 2020. So he was there in November, made $7,500. In December, he made another $7,500, so $15,000 in total for 2020. Now, it's 2021. John's a U.S. citizen, so he's looking at preparing his taxes. He goes ahead and he files an extension request, 4868, in April, because he doesn't want to do it before April 15th. He's going through a busy season himself, so he's busy. Now he revisits his return in May. When he's preparing his 1040 and Form 2555, this is the Foreign Earned Income Exclusion form, and we'll look at an example of that later. So he's doing this in May 2021. He's trying to exempt the $15,000 he earned in 2020 from his gross income. He's trying to do that under the Foreign Earned Income Exclusion. So here's the problem. In order to be able to claim that physical presence test to get the Foreign Earned Income Exclusion for these 2 months, he's got to show that he was physically present in the foreign country for a whole 12-month period. Now, when he's doing his return in May, he's only been in the Caymans for 7 months, right? So he moved down there in November. He was there in November, December, January, February, March, April, May, right? So 7 months. He hasn't met that 12-month period. So when he's looking at this, he's saying, okay, wait a minute. In order to meet that 12-month period, I'm going to have to actually live in Cayman until November, right? November 1, 2021 will be 12 months spent in the Cayman Islands. So he knows he's going to meet that 12-month mark because he's got a contract. He doesn't want to leave. But he can't file his return in May or June or even in October. He can't file it in October claiming that he meets the requirements under the physical presence test because it's factually impossible, right? If he files a return in, let's say, September 2021 or even October 15th, 2021, he can't say that I've been in the Cayman Islands for 12 months because he's 15 days short if he files on October 15th, 2021. So this is why the 2350 form exists. What the IRS is doing here is they're giving John the extra time he needs to meet that 12-month period for the physical presence test so that when he files his tax return and when he completes his form 2555, he can claim the foreign earned income exclusion, a prorated amount for the wages earned in the Cayman Islands. So that's where you would need this. Now, if you moved abroad, let's say before October 15th, you can just file the 4868 and you'll get there anyway. But it's in this kind of unique fact pattern where you move sometime post October 15th, before the end of the year, and you're just falling short of the time required in order to meet that physical presence test. So this is the fact pattern. Let's look at the actual tax return and to see how this kind of works, actually on paper. So here's John's tax return. His return is relatively simple. He's reporting total wages for the year of $45,000. Now that $45,000 includes the $15,000 he earned in Cayman and $30,000 he was earning as an accountant during the year just living and working in Florida. So if we scroll down here to the 2555, this is the foreign earned income exclusion form. Okay, so we've got John here, his social, his foreign address where he's living in Cayman, his occupation, and then his employer name and then address. Now, the part that's important here, remember, you can qualify under this earned income exclusion using either the bona fide residence test or the physical presence test. John's going to use the physical presence test. Now, his physical presence test, the period that he was living in Cayman, right? So when did he move there? November 1st, 2020. And in order to hit that 12-month mark, he has to live in Cayman from that date through October 31st, 2021. Okay, that's it. This is why he needs that additional Form 2350 for the extension, because he cannot he cannot enter a date that is in the future from when he files a return. So he needs to be living in Cayman through this date, and then he can file this tax return after October 31st in order to claim the foreign earned income exclusion. So down here, he's got his foreign earned income for the year. That was the $15,000 he earned in Cayman from that foreign employer, right? So $7,500 a month, November and December. And then when you look at him prorating his exclusion here, remember the total amount of exclusion available to taxpayers for this year was $107,600. But because he was only living in the Cayman for 2 months, he only takes those number of days that he was actually in that country. So when you prorate the exclusion here, the total available he has for that year is $17,934, and the amount of actual foreign earned income he had, that $15,000, falls underneath the exclusion amount. So all of this amount that he earned in Cayman will be exempt from federal income taxes because he qualifies for that foreign earned income exclusion. Right? So that's effectively how this works, and that's why the 2350 is so important. Now, if we look at the 2350 itself, we can see how the form is designed to try to fit this fact pattern here, right? So we've got John Smith, a mailing address for him in the U.S. he wants to get his mailing address here, or mail sent here, right, because it's perhaps more reliable than having it sent to Cayman. But so we have John's name, his mailing address, and this is where he indicates why he needs that additional time. So he's asking for an extension until November 15th to file his income tax return for 2020. Now, generally when you file this, they'll give you up to 30 days beyond when you expect to qualify under the physical presence test. But in this case, John, he's got his return ready to go. So he's just asking for another 15 days. Right. So question 2, were you previously granted an extension? Yes, right, because he filed the 4868. He doesn't need more time to allocate moving expenses, so that's just no. 4A, the date he first arrived in the foreign country, November 1st, 2020. And then again, here's the qualifying period. So November 1st, 2020 through October 31st, 2021. That's the date he's shooting for. And then we have his home address down here. And then date expected to return to the U.S. You can leave it blank. I mean, if he has no expectation of coming back anytime soon, just leave it blank. Now, line item 5 here, again, very important. This is not an extension of time to pay your taxes, right? Taxes are due by April 15th. This is just an extension of time to file the return. So when he prepared his return to kind of rough in the numbers, this is the amount of tax he's going to owe. So when he files this with the IRS, he should be making a payment with the extension request. Okay, so then he signs it, dates it, mails it in, and then the IRS will review the application, and they'll check off one of these if they approve it, and then they'll mail it back to you to let you know that an extension was granted. So that's the long and the short of it, of the 2350. Obviously, the form itself is relatively straightforward. It's just a one-pager, but the theory and the rationale behind why you need this, if you're a foreign person living abroad, is really important. So again, it's not necessary for everybody. It really just kind of comes into play if you moved after October 15th. So sometime after October 15th, November, December, you move to a new country to start a job, you might need this form to get that foreign earned income exclusion amount. So thank you for watching. I hope that was helpful. If you have any comments, please leave me a comment below on the video. Happy to answer those, and I look forward to seeing you again soon. Bye.